This meeting is being held in compliance with the Brown Act. SCAG offices are open for members of the public to attend and participate in person. Instructions for providing public comment have been provided in advance and are also included in the agenda packet. If a member of this body is attending remotely but is not at a location specified on the agenda, they may observe and comment as a member of the public, but may not participate in any member discussion or voting of this body. For all members participating remotely, please ensure your microphone is muted when not in use. Please state your name during deliberations and whether making a motion or offering a second. Any voting member or member of the public calling into this meeting by telephone can press *6 to mute and unmute. All telephone participants should identify themselves prior to speaking. SCAG encourages all members of the public to participate in its meetings. We are committed to holding meetings accessible to people with disabilities. For members of the public requiring ADA accommodation, please call 213-630-1410. SCAG offers free interpretation services for members of the public needing information in another language. Please call 213-236-1895. The meeting will now begin.
Good morning. Today is Thursday, March 6, 2025. The meeting of the Community Economic and Human Development Committee is now called to order. As a reminder, if a member of this body is attending remotely but is not at a specified location on the agenda, they may observe and comment as a member of the public but not participate in any member discussion or voting of this body. I'm going to ask the Honorable Frank Zerunian to lead us in the Pledge of Allegiance.
Morning. Still the greatest country and the greatest flag I know. Please join me. I
pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Thank you very much, and I'm thrilled to see we have a large attendance from one of your classes. Your students are here today from USC, and so welcome and enjoy this meeting.
USC.
Yes. For the thousands in attendance and the millions watching around the world. Okay. I'll ask the clerk to please confirm the quorum today.
Chair, good morning. Confirming we have a quorum.
Thank you very much. We'll now move on to public comment period. For those, I will open the general public comment period for those items within SCAG's jurisdiction which are not listed on the agenda. Staff, have we received any written public comments after the deadline of 5 p.m. on Wednesday, March 5th, 2025?
Mr. Chair, we did not receive any written public comments after the deadline of 5 p.m. on Wednesday, March 5th.
Okay, do we have any members of the public wishing to speak?
Mr. Chair, I do not see any members of the public wishing to participate in person.
All right, I will now close the public comment period for matters not listed on the agenda. And I'll ask if we have any members, actually, we'll move on to review and prioritize agenda items. Is there any member of the committee that wishes to review or prioritize agenda items before we proceed further? I don't see any in person. Any hands up? Nope. All right. Do we have any members of the public wishing to speak on the consent calendar?
Mr. Chair, I do not see any members of the public wishing to participate in person or online.
Okay. And I'll ask if there are any comments from the members of the committee on the consent calendar, online or in person. In person, I don't see any.
I'll move the consent calendar.
Second.
Okay. It's been moved and seconded. Did you get?
Was the second by member Ike? Okay.
Yes.
Thank you.
Excuse me.
Member Ike. Yes. All right. And the motion was made by member Buck. Okay.
Yeah.
All right. We'll ask the clerk to do a roll call vote on the consent calendar, please.
Okay. Joe Baca. Wendy Bucknam.
Yes.
Don Caskey. Tanya Doby.
Yes.
Deborah George Sporada. Keith Ike.
Yes.
Shauna Elias.
Yes.
Bob Engler.
Yes.
Rose Espinosa. Wayman Furman. Claudia Frometa.
Yes.
Thank you. Martin Fuentes. Victoria Garcia.
Yes.
Thank you. Gary Gardner. Mike Goodself.
Yes.
Thank you. Mark Henderson. Peggy Huang. Cecilia Hupp.
Yes.
Thank you.
I'm sorry, this is Peggy Huang. I'm a yes. I couldn't unmute myself.
Okay, thank you. Noted. William Fusey. Matt Levere. Jed Liano.
Yes.
Thank you. Annie Marshall.
Yes.
Thank you. Andrew Maciel. John Mirish. Geneva Mojado. Joseph Moravito.
Yes.
Thank you. Suzette Mullins. Joseph Murphy. Tomas Oliva. Misty Perez. Freddie Puza. Rocky Rhodes.
Yes.
Sunny Santa Ynez.
Here.
David Shapiro.
Yes.
And member Santa Ynez, to confirm, is this a yes for the consent calendar?
Yes.
Thank you. Becky Shevlin.
Yes.
Mary Solorio.
Yes.
Thank you. Helen Tran.
Yes.
Mark Warnick.
Aye.
Thank you. Jeff Wood.
Yes.
Judy Woolsey.
No.
I'm sorry?
Yes.
Okay, thank you. Tony Wu.
Yes.
Frank Yokoyama. Okay. Frank Serenian.
Yes.
Thank you. Chair Shapiro, the motion passes with 26 votes yes, 0 votes no, and 0 abstentions.
Thank you very much. And for those following along and the public here today, that was a consent, which is approval items, minutes of the meeting from our meeting in December, as well as a CHD agenda outlook and future agenda items. All right, we'll move on to informational items. Today we have the regional recovery and resilience in the face of disasters policy discussion. As you'll recall, SCAG convened last meeting, a joint policy committee last month to discuss the recent wildfires and to start a conversation on regional resilience. To continue this important conversation, each of SCAG's 3 main policy committee meetings will meet in March and April to hear from experts on resiliency and participate in discussions that explore effective planning and building resilient communities. Staff will summarize the takeaways from the March and April policy committee meetings at the Executive Administration Committee and Regional Council meetings in June. Today, we will hear presentations from 2 speakers and allow members to ask questions of each of the speakers. First, we are honored to have Mr. Tennis Wick, the Director of Permit Sonoma and Plan Section Chief in Emergency Operations, who will share his experiences in Sonoma County, where I grew up and my family still lives. He has been with the County of Sonoma since 2013. With that, I will call upon Mr. Wick to begin his presentation. Welcome.
Good morning. Thank you for the opportunity to have a discussion with you this morning. And thank you for all the mutual aid that you've provided to Sonoma County since 2017. We sincerely appreciate it. It came at the most dire time in our disaster response. So I'm here to help pay it forward, as we have through mutual aid to other counties and regions in California and Hawaii. Next slide, please. So I want to give you a brief snapshot of our experience 4 megafires since 2017. So as the chair mentioned in his introduction, I serve as the director of our land use authority for the county, Permit Sonoma, and also as plan section chief. So our team staffs the planning and intelligence desk in the Emergency Operations Center. So we have been doing that since the recovery of the first megafire through 3 successive ones, while also going through the rebuilding and then our regular work in Permit Sonoma. So it's been a busy time. And we couldn't do it without the help of our friends in other California communities. As you can see, for the devastation that we went through in losing 24 community members, 10% of our county is burned. So the environmental setting in which we operate in our civilian and in our second responder capacities has changed dramatically. And the challenges we have are replacing over 7,000 housing units in both the unincorporated county and the city of Santa Rosa. The good news is we've been able to almost reach 90% completion, including 1,000 additional ADUs or accessory dwelling units that weren't there previously. So out of this kind of tragedy also comes a lot of opportunities. And then just an observation that we've made that I think is ever present in my mind, and that's that need of fire survivors who are different than other disasters such as floods, because they've lost everything, their credentials, their home, many of them their businesses. And while they're trying to restore all that, the average fire survivor in our experience lives in 5 places before they're rehoused. So with that, next slide, please. I'm just going to break down my remaining comments into 2 remaining slides and leave time for hopefully dialogue. So this was opportune to have your invitation. Last week, I was speaking before the Assembly, 3 different committees, Emergency Management, Housing and Community Development, and the Economic Development Committees, again, in the Assembly, led, at least the Emergency Management Committee, by Rhodesia Ransom, who had some particularly great questions and dialogue with us. And I wanted to bring this forward because so many of us are pressing the legislature. And I think to the extent that our voice is unified at the local level, we can bring about change that's going to make our jobs easier in the future. One was to extend the emergency management mutual aid system from response to recovery. So as many of you probably know, there's the first responder mutual aid process in California for fires, which is the best in the world. We have the biggest firefighting suppression force on the planet, and we share our resources with people in other states and other countries. Many people don't know that we also have a second responder mutual aid system. And that's where, in my introductory remarks in thanking you, many people from other local governments in California have come and helped Sonoma County. And we try to do the same for them in response. Unfortunately, that process does not come through, carry through to recovery. And I think the legislature could make that happen. We could rely on each other where the experience is much more present and effective and less expensive. So I would ask for your support as we communicate with the legislature on that issue. The second is really looking to the state to combine so much of the work that we do at regional levels around housing and rehousing and rebuilding. So for instance, the governor has coined the previous Office of Planning and Research to the Land Use and Climate Innovation Office. And it seems like a good place to take all the good work that we've all done around permit-ready residential design, whether it's for rebuilding post-disaster or just meeting our housing needs in that office. A lot of great dialogue among our different regional bodies. But again, I think if we can share that, it's an even stronger resource. The same for emergency housing measures. So when we went through our initial mega fire in 2017, we came up with a number of housing measures that applied in the burn zone and outside of it in order to accommodate fire survivors, but also the people who were suffering from housing scarcity without being displaced from fires. And we've passed those on. It's almost, since we're all kind of local government colleagues here, it's staff reports, resolutions, and ordinances about how to bring RVs into driveways and meet public health and safety standards, and a whole raft of other measures. That's now been passed around California. It's almost kind of an open source docket and improved over time. Now it's with my peer and friend Amy Bodek in LA County Planning, and we hope to see what she brings and improves upon that. Again, something that could be available to everybody in the state instead of relying on kind of the ad hoc and goodwill improvements that we're making today. And those emergency housing measures could be something that are incorporated into the safety element on its next round as we all come into compliance with the general plan requirements under state law. And then something I think it's always important, even though we have many of our colleagues from the local government level ascend into the legislature, to remind them to please, especially the staff members in the state departments, check with us at the local level before you impose new mandates, especially in a time when we're going through disaster recovery. This is not the time to be adding additional burdens onto fire survivors and onto local governments that are struggling to meet their regular business and the needs of disaster recovery. And an example of that is please be more flexible, Housing and Community Development Department. Now that we've all struggled to identify those regional housing needs allocation sites, if some of those sites are subject to destruction in a fire or a flood, be flexible with us when we're trying to meet the needs of the community, meet the state requirements, and yet those sites are going to be disrupted for some time and may need to be substituted with new ones. The next slide, please. So at a regional and local level, some of our lessons learned when we were setting goals for recovery. The first was keeping survivors in our community for social and cultural reasons, economic reasons. So that meant rapid rehousing policies, those housing emergency measures I mentioned earlier. And that's getting people back onto their sites as soon as possible. And in many cases, those were trailers. I think we found, as you're probably just experiencing now, there was some initial coordination challenges, but overall, we were able to keep a number of people in our community by getting them back on their property. And then for all the advantages that we extended to fire survivors, we also made those available for their successors in interest, because the needs of fire survivors are varied. There are people that want to get back onto their property and live there as soon as possible. And then there are others who, for personal, psychological, economic reasons, need to move, hopefully somewhere else in the community. So by extending those same advantages to their successors in interest, it creates certainty, which allows them to get their property sold quickly and to move on. But it also helps in the whole community rebuilding process. It's also a lot easier to administer if you're not having to, as we found initially, quiz people about whether they're really the fire survivor or not. That's just a loaded discussion to have with fire survivors. So we found success in extending those same benefits to successors in interest. And also recognizing that fire survivors have different needs than regular customers when it comes to rebuilding. We created a whole separate division that was able to meet fire survivors' needs because we still had the need to continue our regular business. So we actually had two physically different places. Now that might be different for different communities depending on the level of recovery. But we found it really necessary because especially at intake, whether that's just getting property research conducted or getting an application brought in, fire survivors are still traumatized. And where an average intake might take 5 or 10 minutes for regular business, it might take an hour or two per survivor. Just to listen to where they are in their recovery process, to help them get the information that they no longer have access to. So there are different considerations that need to be respected when fire survivors are coming back in for government services, whether it's permitting or other. And then around the opportunities to meet not just the recovery housing, but also the other housing challenges that we had before disaster, before fire. I've heard different goals articulated in different recovery settings, including the LA fires, of we will let you build back what you had. Respectfully, I think that can be limiting at times, because what we were looking for and have been successful in getting is we want you to build back better. And one of the community meetings that we had in Altadena was hearing from people a pre-fire condition not unusual in any of our other communities. And that is they had multi-generational, multi-households housed in one building, and people essentially living on top of each other. Well, now the discussion has evolved into what can we do in rebuilding after the fire to provide more housing in a more respectful manner. And I am encouraged for the fire survivors in Altadena, but also to see what we'll all be able to learn in California and the West as you rebuild your communities. I think it's going to be extraordinary. The design and development community that you have down there is coming together in a way I've never seen before, with a lot of talent, and they're collaborating really well with Ms. Bodek and her team. So I think we're going to learn a lot from that. And many of the conversations I've had with local officials and state officials is let survivors build the code. There are, I think, a lot of efforts that are well-intentioned around climate action to take this moment and increase the requirements on fire survivors. Think of solar panels, energy storage units, and heat pumps. Well, those 3 units alone are $60,000, roughly 20 grand a piece. This is not the time to be putting, in my opinion, that added economic burden on fire survivors. If you can find other ways of accomplishing those objectives, whether it's through corporate donations or other approaches, that's fine. But this is the time to recognize that we're replacing relatively old housing stock under the modern code, and that alone is going to gain us a lot of benefit in climate action. So let's be measured in our response. And if we are going to consider the needs of fire survivors, again, looking at it, exemptions for rebuilds, this is really more in the rural setting. So we're kind of in Sonoma County, as the chair may be able to understand, we're kind of a hipster hick county. Our southern half is in the Bay Area. Our northern half is in the Redwood Empire. So we have a lot of people who are on propane gas. It's not an urban setting, so they have different needs and need exemptions in order to comply with today's building code. Some of the things we can do in thinking smarter in regulation is for those people who aren't going to be able to meet at least all of the code requirements, say when it comes to solar power, we can at least encourage them to pre-wire their houses under the building code so that as they have that capacity later or that ability, they can literally plug in instead of having to go back and rewire homes. This is a good time for that kind of cost-effective investment. So with that, I would look forward to a discussion with the community, unless you have other comments on the presentation. Thank you.
Thank you very much, Tennis. And I am certain there are going to be multitudes of questions. Thanks for your presentation and offers of support in any way. We appreciate it. I'm going to turn now to our committee members and look for questions in the room and see the Honorable Frank Serenian, please.
Thank you for your presentation. And I think, it's extremely timely for us in Southern California, and your experience is extremely relevant for us. I have a several-part question. First is, how many of your residents had insurance? And what was your experience in seeing the rebuilding process for those who were insured as opposed to those who were not insured? And what happened to those that were not insured?
Okay. Insurance, it depended on the fire. So as an example, in 2017, a number of urban service provided residents burned, particularly in city of Santa Rosa, which you wouldn't think of as the wildland urban interface on the west side of the highway, if you're familiar with the community. Number of county employees, city employees live there. So they were insured for the most part, probably in the higher percentages, like 80%. Many of our rural properties were not. So that probably came to in successive fires like the Wall Bridge in 2020. Either because they were legacy homes that have been owned for a really long time and people were able to buy out their mortgages sometime before and felt the need that they didn't need to insure. There were more people who were not. So that was a lower number, probably 50. For the insured, it really depended on the insurance company. The insurance companies were overwhelmed. We saw a lot of adjusters coming in and appraisers from other parts of the country. And as you all know, it's a very local practice. So there was a lot of stumbling. There are a lot of folks who had 4 or 5 appraisers in the course of their experience with the insurance companies. So some did not do well. Others, like USAA, I think represented their communities and they're insured very well. For those who were uninsured, a lot of those folks either sold or were rural enough that they just rebuilt on their own. So that was, again, there were a lot of variations, but that's kind of a snapshot of what we experienced.
Thank you. Next call on the Honorable Wendy Buckman.
Thank you. Thank you for this great presentation, and thank you also for the way you started out with we're here to pay it back or pay it forward. That's just shows the resilience of the local government approach, and we appreciate that. My question is, can you give us a few examples of things that you've put in place that are a preventive measure that you learned going forward?
Good question. So we were fortunate to receive the first Building Resilient Infrastructure and Communities grant, actually by surprise directly from President Biden. And we started on the application based on our experience of going through multiple mega fires and saying, how do we get out of this? So it was very instructive to be part of the emergency operations team and have a multidisciplinary regular practice in Permit Sonoma. Our shop is the kind of a community development plus example. We have building planning and code enforcement. But we also have the county surveyor, engineer, and we also have all the non-suppression fire responsibilities in the county, in addition to a natural resource team that we've built. So the last two divisions, fire and natural resources, really collaborated. Usually, while we were in the emergency operations bunker on the graveyard shift, working with the CAL FIRE chiefs and saying, how do we get out of this? How do we stay out of the bunker in the future? And so far, so good. So we put together a proposal for 3 geographies in the county based on our fire history, and went through a strategy from working from the building out and from the wildland in. We put that application together and again received the award from the president, much to our surprise, with about literally 10 seconds of warning several years ago now. And we are almost finished with phase 1 of the grant and are now moving into the second. And it will begin starting from the building and working out with things that are probably very familiar to you all of structural hardening and defensive space. The part that I think we were awarded the grant for really had to do with working from the wildland in, and that is preserving fire cuts, working on prescribed and cultural burns with our tribal partners, using agricultural buffers. This is Sonoma County, so vineyards, but also dairy counties, so grazing areas. And then as we move into the forested perimeters of these 3 geographies, mechanical and handheld vegetation management measures. So we are on the cusp right now in 2025 of moving into the field and accomplishing that second phase.
Great job.
Thank you. And before I call on the next a member of the committee, I want to let all the members know virtually and in person that staff will be providing slide deck presentations to everyone for both of the presenters we have today. So that is appreciated. Moving on to the next question will be the Honorable Tanya Doby.
Thank you. And thank you, Tennis. That's probably one of the most helpful presentations that I've heard so far. So thank you. I have comment and then I have a question. So as I was listening to you talk about the amount of time that goes into assisting the fire survivors, you said usually people with permitting and whatever, it's like 5 to 10 minutes, but with the survivors, it's an hour to 2 hours. I immediately thought of maybe, I guess I could call it an adjacent community, which would be our homeless or unhoused, whichever way that you refer to them, as I would assume that there is an overlap in the types of assistance that they would need. So my comment is, and I've thought this through as much as I can. So now I'm looking to hand this baton to somebody else. Has there been any thought to, if you perfect one community, it would lend itself to assistant to the other or something more similar? Like if we can help the fire survivors and the issues with getting the information and the documents and the resources, that it would lend itself to also helping our homeless, as I drove through LA to get here. So that's kind of what triggered that. But that's just
Gotcha.
you don't need to respond to it, but if you have something,
Okay.
I'll take it. But that's just where my mind went.
Yeah, so getting back to the earlier comment under our emergency housing measures, this came up. Should it just be available to fire survivors? Let's say so this was not just in the burn zone, but outside the burn zone, and not just in the county, but we really pressed the cities that were not impacted by the fire directly. By fire destruction, everybody got hit in the economy. And we were already going through an acute housing crisis. So our message was, we need to make this available to anybody, because a lot of people are displaced by the disaster indirectly, since it's just more people competing for less housing. So those emergency housing measures of putting people in RVs and other people's driveways. You can drive around Sonoma County today and see multiple trailers on residential properties, rural residential properties that are serving a combination of fire survivors, but also people who were unhoused before or after the disaster. So I think in some ways, and I'm sure we've all gone through it in different manners of either acceptance or resistance to housing, alternative types of housing for the unhoused. I think with this experience, people have become more accustomed to it. Not completely, but it is now an active part of our housing program.
Fantastic. Thank you for that. And then my question is, also thank you for going and trying to negotiate with our most amazing legislators. And I mean that with all the sincerity of my heart. I hope you hear my voice for the most part. But how can those of us, like I'm a small Orange County city, I will probably never be impacted by that type of emergency, but I am an exceptional ally. What is a way that those that would never be impacted or close to never be impacted be able to come alongside? Is there like a resolution? Is there a letter that we could send? How would we be best able to join forces with you?
Well,
and that's my final.
Thank you. I think, as I mentioned in the initial slide, and that is supporting what are really more or less, some of them might be bill required changes, but some of them are just administrative changes in business practice at the state level. So extending mutual aid from response into recovery may require legislation. And I think Chairwoman Ransom is very supportive of that. But the emergency housing measures, again, Southern California is such a large region. If we can look at the emergency housing measures, and I'd be happy to share, I think I did share with Elizabeth the package in a box that we have for the staff reports, resolutions, ordinances, and Ms. Bodek also has it, LA County. Adopting those measures in as many cities as possible will mean that every community is spreading the burden in order to better house people. So it would be both those things. And that, if you need to contact me, that last tile has my contact information and it's my cell number. So if you just text me in advance, happy to help and collaborate further.
Thank you. And I don't see any other in-person placards raised or hands, so I'm going to turn to online. We have the Honorable Bob Engler, followed by the Honorable Bill Hussey.
Hello, everybody. Yeah, thank you so much for the great presentation, Dennis.
Sure.
I think my questions really revolve around, we all have, our cities have a variety of housing stock built under different codes and everything over a number of years. You touched on it a little bit, bringing people up to the current codes. Can you go a little more into the challenges of that? Was there any funding that you could find to help people overcome that sticker shock, fee waivers, anything you may have done to help them along with that process?
Yeah, so most of our fires, again, happened in the rural area. So there's, I'll address the rural and the urban because their treatment was generally different. So for our fire survivors, another advantage to being in both emergency operations and the regular practice, our building inspectors were out there right alongside CAL FIRE damage assessment teams. And I really applaud CAL FIRE. They collaborated like, I wish all state agencies collaborated with us as closely as they have. We learned that most of the wells were still functional. Their electronics got burned. Same with septic systems. And most of the driveways were already developed. So we took those out of the scope of our re-permitting and just presumed that they were okay. If we found out differently during the rebuilding inspection process, we worked with the contractors and the fire survivors to get it to the best practical result we could. And that meant a substantial reduction in fees. I think it's important for all of us to remember that especially with insured, their policies already cover permit fee costs. So unless we're careful, the unintended consequence would be that you're basically passing along that savings to the insurance companies. So in the urban area, it got a little, it required, in some cases, like the city of Santa Rosa, underwrote some portion of those fees because almost all of their, if not all of their folks were on urban services. So they didn't have that same consideration I mentioned in scoping rebuilding for rural properties. So that plus we went fast. We learned a lot about what we ought to have been doing in our regular business that we needed to do for fire survivors. So lots of good lessons learned in business improvements.
Thank you. Yeah, that's always, time is money to a lot of contractors. So going
exactly
quick makes a big difference. So thank you.
So, yeah.
All right, thank you. Honorable Bill Hussey. Bill.
Thank you. One of my questions, good presentation, but the question is, we want to take care of the fire survivors, and you're cutting fees and stuff. But I'm just wondering, and I don't know if you had a presentation on this before because I wasn't there last month. But what about a property tax increase? Because usually when you rebuild, you're going to get reassessed, and now those survivors that have been there for generations are going to have a higher property tax. So now after they rebuild and ready to start their life back, now they're getting hit with a higher property tax. So has anybody ever thought about getting with the county or the state to see if they could do a waiver and go back to the original property tax? So that's my question, just how, instead of them starting to get on with their lives and all of a sudden they get hit with a tax that they can't afford. So
good, great consideration. Yes, we did have that challenge. And our assessor and our tax collector noticed it immediately. And sought special legislation, obviously with our Board of Supervisors, to basically, if people are building back the same square footage, their assessment was held there as fire survivors. If they added on, only the addition was considered for reassessment.
Okay, thank you.
Thank you. The Honorable Mike Goodsell.
So I hesitated to contribute, but I've got to share a personal experience. I came up here yesterday from down in Imperial County, made our long trek up here, and I was in my hotel room at 12:30 last night. My wife called me on the phone and said, "Mom's house is on fire." Last night. And her mother deceased recently, and we've been trying to manage both households and deal with her cats. So what had happened was neighbor had made a mistake. 95-year-old burned some trash, put it in the bucket for collection, and it smoldered until the winds picked it up last night. And it didn't burn the house. When my wife got there, all she could see was smoke and fire trucks and everything. It burned.
I'm sorry that happened.
The garages were outbuildings for both properties, and those were consumed. And a classic car that was in the driveway was destroyed. But my question is, how do you collect information from survivors in your experience that contributes to making better efforts in the future? My experience is different, but I guess in a way we're survivors now, right?
Yeah.
But at the house, we're very fortunate, and we're still counting cats.
Well, I hope you find them. And I'm really sorry that happened to you. Loss is loss. It doesn't matter if it was a small home or a large home. And it's something that I think is ground into us now. It doesn't matter if you're poor or affluent, it's still loss. And you lose everything. You lose your credentials. So as you've done, I think, really well. And again, I've been supporting the Eaton fire survivors primarily, but the kind of support I've seen come together in the disaster response centers is fantastic. And it starts with DMV and getting your license back, State Department and getting your passport, Social Security and getting that credential. So you literally have your identity to get the rest of it done. But when it comes to permitting, also part of the consideration is the assessor, because those notes are often very helpful for folks who've maybe not made any improvements to their house. Their house may predate, like a lot of homes in Altadena, predated permit requirements. So the assessor is the only one that has record of what was there before, unless somebody luckily had stored someplace their blueprints, which is unlikely. So we face that here too. And in fact, it's one of the things that gave me hope. The very first fire survivor that came in to our center, and Chair, if you're from Sonoma County, you would appreciate this. Her name is Butterfly. She was a child of the 60s, like me, and she lived on a home on a road that was narrower than a typical driveway, way up on a ridgetop. And Butterfly had a 5-bedroom house, none of it permitted. And she had a different way of speaking. So I literally just walked her over to the assessors. We went through and found records. Asked her if her well and septic system were functioning okay before the fire, and worked with her to come up with a home in generally the same location. Obviously, amenities were a bit different. Everything was code compliant. And it was a great confidence builder and a way for me to show our team that this is not a time for strict adherence. This is a time for flexibility in working with fire survivors. That's a really important psychological message to get across to everybody in the organization, whether it's permitting or anything else in our governments.
Thank you very much. I don't see any other in person or online. You brought up Butterfly. I have to say, I grew up in Santa Rosa. My family's there. They're up there helping a lot since the Paradise Tubs and all the other fires. We had an Woolsey fire. So my mom, who was 84 at the time, had to move 3 times in 20 hours to relocate to escape different areas of the city on fire. She was out near Highway 12. So I'm very familiar with it. I've worked with Dan. He was a city council member. Now he's supervisor, Chris Corsi. Worked for years trying to provide support from our city, our communities during your emergencies and vice versa. So we appreciate that. We need it. All the other questions have really been touched on that I had. And the only one I wanted to ask, how long on average did it take for residential families' homes to be rebuilt, if you have an average estimate?
18 months.
After permits were all accepted, but total time from start to finish is what I'm looking for.
Yeah, I would include that.
Okay.
So I would mark the time from, when they get their settlement from the insurance company, and they've gotten through that whole traumatic process. From that time forward, things move really fast. And we had, as you would know, we had bottlenecks that probably aren't as present in the Southern California region. We had only 5 geotechnical engineers who are familiar with our geology in our area. So that was a big bottleneck. Didn't matter if you had all the general contractors, architects in the world. If you had to go through those 5 people, that was a challenge. But we also, as you'll see in the emergency housing package, it's a time we were building literally around the clock. Up until a couple of years ago, we still had concrete foundation pour inspections happening at 2 and 3 and 4 in the morning. It changes, loosening up use permit hours of operation so that you can take the debris rubble from foundations and convert it into base rock that can be used for roads. Literally, as you probably saw, sir, just the mountains of rubble that ended up in designated areas, but being piled next to the freeway. So there's a host of things to consider in that process to make it go that fast.
And incredible that number, because we're hearing 3 to 5 years at a minimum down here. When you talked about the geotechnical experts, I do have to follow up and ask, were you testing on the residential homes and sites the soil at that point before allowing rebuilding?
Yes. Yes.
And you were looking for, obviously, toxins and so forth, so that you wouldn't have someone rebuilding on that type of soil.
Right. So we were already, the condition was already clear, just as you've experienced. And boy, they've learned a lot since 2017. Really impressive to see the way that Army Corps and US EPA are going through in the Altadena community and really clearing almost block by block so that construction can happen as quickly as possible. In our area, it was the first experience. It was the first time that Army Corps had ever responded to a fire. So it was more of a massive first wave of Army Corps and then the environmental, and then the reconstruction. So now I think for that reason, I think it's going to happen faster in your community, and also just because the resources in the trades and design communities that you have, it's just enormous.
Well, thank you very much, and thanks for all your hard work and great work. And I see the Vice Chair, Honorable Rocky Road, hand up.
Yeah, Mr. Wick, thank you very much for being present in your community, but then sharing this with us. I had a question, but it was somewhat answered already, so I can move forward. And that is that could we get a copy of that emergency housing measures packet? And it sounds like Ms. Carvajal already has it. One of the things that SCAG and CEHD does in particular is try to find best practices and be able to publish for our cities. And so perhaps to Ms. Dobie's question, maybe we can take what you have, find some places where individual communities differ than rural, because we have urban, and insert those as well, and then publish that as a toolkit for our members, our jurisdictions. And so I'd be anxious to talk to staff about making something like that happen as a work product. That seems like the work is mostly done. So thank you for all of that, put it together. I do have one. It's a technical question I should know the answer to, but early in your presentation, what do you define as a second responder that you were hoping to get mutual aid for?
So so I didn't know when I signed the contract with the board 12 years ago that I was a disaster service worker. And yet I've spent over half my service now in the dozen years I've been with the county in emergency operations. So think about all those people that you have in your emergency operations center who are planners and engineers, but also from other in the logistics team and operations teams, from park rangers get brought into it. Because they can serve in operations while sheriff's deputies and police officers are busy. The people in the social service and health service departments that come into logistics because they know procurement. So those are all the second responders that support the first responders who are actually out in the field for the firefight.
Got it. Thank you very much.
Mm-hmm.
Thank you very much, Mr. Wick. I do not see any other hands raised, so I will thank you for the presentation and all your work, and we'll be in touch and appreciate any support you can provide. We have another presentation coming from Ms. Tamara Thetford, the Vice President of Impact Evaluation at CNOTE. She'll provide a presentation on community development financial institutions. Community development financial institutions, or CDFIs, are U.S. Treasury certified lenders focused on economic inclusion. With that, I call on Ms. Tamara Thetford to begin her presentation.
Wonderful. Thank you so much. Good morning, and thank you for the invitation and also this opportunity to provide information to the committee really about how community finance plays a pivotal role in resilience and recovery. And I also wanted to thank Tennis for his presentation and for me to be able to hear the discussion. A few themes that really resonated that I think you'll hear come out in my presentation, also around listening to local need and real flexibility when it comes to responding and recovering from disasters. If we go to the next slide, I'll start just a quick introduction. My name is Tamara Thetford. I'm the Vice President of Impact Evaluation with CNOTE, which is a firm that connects capital to mission-driven financial institutions. I've worked in this U.S. community finance space for about 25 years now at national organizations like CNOTE, as well as directly at a community financial institution. And I'm based in St. Louis, which is where I have the opportunity to share with you today. If we go on to the next slide, just a few quick notes on CNOTE so you kind of understand a little more about the work we do and the perspective I'm coming from, and then I'll talk about our agenda. CNOTE is a woman-founded and led technology platform. We help corporations and foundations, so all different types of institutions, align their capital with their values and their impact objectives. We also work with individual investors, really to do the same with their personal and family wealth. And we are mobilizing all of that capital and then working with a network of mission-driven financial institutions that are located all across the country and are really focused on assisting communities which lack access to capital. So these tend to be low-income communities, communities of color, rural communities, and many other communities that experience barriers to getting the kind of investment and financial service that they need. Which is a good segue. If we go to the next slide, just quickly tell you what I wanted to try to share today. On the next slide, we should see that I want to first provide an understanding about the ecosystem that's out there. And when I'm using this term mission-driven financial institutions, what that really means. Give you some examples of how these institutions are contributing and responding when disasters are occurring. As well as give you a couple examples of how local governments have collaborated with institutions in this ecosystem, which may be useful as you're thinking about disaster response and resilience efforts going forward. So if we go to the next slide, the place I wanted to start was just giving a little more detail on this ecosystem of institutions. So I'm just going to start this term mission-driven that I'm using, or sometimes we'll use the term impact-driven financial institutions. It means the banks, the credit unions, and the loan funds that are focused on lending to underserved communities. There are certain designations that these types of institutions can have that would help you understand that rather than being maybe a traditional bank or credit union, that this is an institution which really has a focus on underserved communities. And one in particular we heard in the intro is called Community Development Financial Institutions, or CDFIs for short. And I'll focus quite a bit on this group in the presentation today. This designation and the certification comes from the U.S. Treasury Department, and it's only awarded to institutions that are focused on economic inclusion and where at least 60% of all of their lending has to be directed towards underserved communities, which is important to understand just because, you know, the bread and butter, the focus of these financial institutions are serving communities that are experiencing barriers to financial health, to economic opportunity, to capital access. The other one maybe to have on your radar, though, are minority depository institutions. These are designations that come from either the FDIC or for credit unions from the National Credit Union Administration. And they're conferred on banks and credit unions that focus on serving and or are owned by members of racial minority groups. There are other designations, but without going too far down a rabbit hole of alphabet soup, these are a couple of the ones I think it's important just to be aware of when we think and start to talk more about examples drawn from this ecosystem. But all of these institutions play really critical roles in the communities that they're serving. They're funding small businesses. They're helping people become homeowners. They're, you know, building and rehabbing affordable housing. They're making sure that they're safe and affordable consumer loan products, either to do normal things like buy a car and be able to get to your job, or recover from a natural disaster with an emergency loan. They also provide financing for community facilities like hospitals and schools. So these are really important financial institutions located all across the country, supporting communities in, you know, these very tangible and practical ways. If we go to the next slide, I touched on this a bit already, but in particular with CDFIs, as I mentioned, they have a focus on low to moderate income communities. So on the next slide, at least 60% of their lending has to be to an approved target market, which is most typically low income borrowers or geographies. They also have formal requirements around how they remain accountable to these communities that they're serving. And since the majority of their lending has to be to these particular markets, they're really experts at providing tailored products and services to underserved communities. So that's where, you'll start to hear, the themes around responding to local needs and remaining accountable to those local needs that's baked into the CDFI model and how what CDFIs have to demonstrate to be recertified. So if we can move to the next slide, to help you understand the landscape a little bit better, and I'll go through this kind of quickly so we get to the examples, I just want you to know that these CDFIs can be different institutional types. So I've talked about banks and credit unions, can also apply to bank holding companies. We also have what we call loan funds, which are typically standalone nonprofits that focus on community lending. So different from your local bank or credit union, where you could go down and open an account and put your savings in there and a deposit. These are standalone institutions that tend to focus on small business lending or affordable housing lending, that type of thing. This also gives you a sense of how CDFIs, the number of them, break down by institutional type across the country. And the last point I wanted to make here is that these CDFIs are located all across the country. Some are quite large, and they're literally serving a national footprint. Most of them, however, are focused possibly on a multi-state or a regional area, and some are quite small and are focused on a particular county or a city. So this can really vary in terms of the size that are serving particular markets. If we go to the next slide, because CDFIs are focused on providing affordable products to underserved communities, many of which are low income, as I mentioned, there's subsidy that's required to support this business model. And so this may be helpful as we look at some of the examples around collaboration with government to understand that CDFIs receive funds to support their work from all of the sources that are listed on this slide, including larger banks, actually, that get Community Reinvestment Act or CRA credit for providing capital to CDFI institutions, as well as they often are getting funds directly from their local, state, or federal governments. So just to understand that they have financing coming from multiple sources, certainly also including foundations and other institutions. So if we move to slide 9, I wanted to start to shift into a discussion of how these institutions are actually supporting in the wake of natural disasters. And wanted to share one example, a very recent example from Rise Credit Union, which is a CDFI credit union. It's part of C-Notes Network. They're based in Irwindale, California. And a couple of the ways that they responded when the recent wildfires started, they very quickly were able to provide emergency relief loans to all of their members that could be used to cover, just all the unexpected expenses that come from, being impacted by a fire, no questions asked. So these are kind of like the anti-payday loan, but a very emergency loan that can be approved within minutes through an automated process. They also, pretty quickly were able to get up and operational, providing forbearance to their mortgage borrowers, understanding that even if their homes were not destroyed, that paychecks were often interrupted, which certainly affects the ability to pay large bills, including mortgages. And then beyond some of those immediate financial products and services that they were able to start offering, they partnered with local agencies to serve the community in other ways, including the YMCA, where they turned their own network of branches into donation and distribution centers, but also co-working spaces for people, including an employee of C-Note was in this situation, who could work remotely and continue to have access to employment, but no longer had a space to be able to do that as his house had burned. So, I think this one is a good example of both the financial products that these institutions and the services that they are able to quickly roll out to their direct members and customers, and also the beginning of an example of how they can more broadly support a community. And if we go to the next slide, this RISE example, it's really not uncommon. In our industry, this term financial first responders gets used to apply to CDFIs and other mission-driven lenders to really summarize how they're trying to show up when disasters occur. I think a piece of it is certainly the financial products, which we'll look at some more examples of, but that piece of coordinating community responses, often with partner nonprofit organizations. Because even though these are financial institutions primarily focused on providing financial products and services, because they are operating in communities that have very, interwoven challenges, whether that's around housing or employment or sometimes, basic assistance or food aid, they have very deep connections with nonprofit organizations in the community that they're using and drawing on just in their everyday operations, which can really become activated and a valuable asset when a disaster occurs. So on the next slide, I wanted to emphasize one piece of this, especially when it comes to thinking about, a bank or a credit union in particular, who a lot of times folks haven't thought about as a critical organization when a disaster occurs. And one of the points that we really try to emphasize with our institutional partners who are bringing capital as a solution is that many times corporations, foundations are looking to make one-time grants in the wake of a disaster. And obviously that grant aid can be vitally crucial, especially right after a disaster happens. But it's very much a one-time infusion of money. And we know that recovery from disaster takes a long time. And I know there was, conversation about this after the earlier presentation. We do see nationally that housing reconstruction often takes 3.5 to more than 5 years, and that the financial health of individuals affected by disaster continues typically for 3 to 4 years, meaning that there's still this financial strain on folks after, that initial round of aid has ended. And of course, when we're talking about underserved communities, the challenges are just going to be that much greater because there's less income, there's less wealth to draw on to be able to rebuild and cope with the financial challenges. So if we go to slide 12, wanted to give one more example and then shift to some of the government collaboration. We see that housing, which certainly came up, is often one of the biggest needs after a natural disaster occurs. And it's also one with some of the longest recovery timelines. And CDFIs, many of them specialize in affordable housing solutions as just part of their core work. And so one example I wanted to highlight here is Orange County's credit union, which partnered with the Irvine Community Land Trust, and I apologize, there's a typo on the slide, to create the Sage Park project, which created 68 affordable townhomes that then the credit union was able to provide low-cost financing products for including the loan product only required a 3% down payment. So they are not only financing and partnering to build the affordable housing project, but then they're able to offer a mortgage product that was more accessible to folks with limited income and wealth. So these are CDFIs often that are already engaged in this kind of lending and bringing that flexibility to a market that needs flexibility. That's, kind of why these CDFIs exist, is traditional lending, traditional financial services are not meeting the needs of the community. So CDFIs are really primed for innovative ways to respond after a natural disaster hits, and that local need becomes clear in the community. So I just wanted to share in closing, if we go to the next slide, to shift some examples of how we see CDFIs collaborating with local and state governments in the wake of disasters. And so this first slide just I'm going to give an overview of the different types of collaboration that we see, and then we'll look at just a couple examples. We often see state and local government providing what we call credit enhancements. So they're actually providing capital to CDFIs, for instance, to be able to offer a 0% interest rate, or to offer a longer term on a loan, or maybe only interest-only payments for a year while somebody gets back on their feet. That's what we consider credit enhancements. Sometimes they're directly providing loan capital. They're partnering with a CDFI and they're saying, here's a $5 million fund that we were able to carve out. We would like, this specific CDFI to administer this loan fund and use it specifically for, whatever the appropriate use is, rehousing individuals, improvements towards rebuilding, etc. And then the other two categories fit a little more in some of this collaboration space. We often see that in the wake of disasters, governments may have grant opportunities, they may have technical assistance or just one-on-one help that they're offering to, help people navigate this system. We often see that governments try to collaborate with CDFIs so that, let's say I'm a small business owner that's been impacted by a natural disaster, I'm already engaging with my CDFI to receive support. That CDFI can be empowered to help me also navigate what other opportunities are available to me, whether that's through my local government or something that, may be available at the state or federal level. So really acting as another navigator to help somebody who has been directly impacted by a disaster, more easily navigate the system of relief and recovery. And I think if we go on to the next slide, I did just want to end by sharing, two examples. These are both drawn from CDFI loan funds. So these are the ones that they don't take your deposits, but they all day, every day are making loans to solve particular issues in their communities. The first one is called the Solar Energy Loan Fund, and they focus on providing low interest loans for home resilience, energy efficiency, and also disaster recovery. And they partner with local municipalities in Florida to be able to administer sustainable home improvement programs. So similar to the discussion earlier, let's say, there's a lower income or elderly resident that needs to make an upgrade to their roof, and they can't afford what would be required to bring that roof into code. This program and the CDFI is able to help that person afford what's required. And it's through this collaboration at the CDFI and the local government level. And they were able to build on this existing work that they're doing after Hurricane Ian hit by providing a 0% interest payment deferred loan to homeowners that had urgent repairs that had to be made. and it was before insurance or federal aid were going to be available. And those were critical repairs to be able to keep people in their homes. And so in this example, the local governments provided funds to make that credit enhancement I talked about, that 0% interest rate possible. And they also provided referrals of homeowners that would meet the criteria of this program so that SELF could directly assist them. One other example I wanted to share is from a CDFI that's called the Business Outreach Center, or BOC Capital. They're based in New York City, and as the name indicates, they focus on providing business financing to underserved small business owners. They're providing affordable loans for those that typically wouldn't qualify at a bank, need more technical assistance for their business than a traditional bank is going to offer. And sometimes they just need a small loan that is kind of too small for a traditional bank to worry about. After Hurricane Sandy, they worked with both New York City as well as New York State to kind of immediately connect these small businesses to relief funds that were being offered by the government entities. And then within a couple months, they launched a full disaster recovery loan program that did blend the loan aspect, the recovery loan, and also this technical assistance service to business owners to help them navigate all these programs that were cropping up that were offered by governments as well as some private and other individual services that were available. So if we go to the next slide, I know it's a bit of a whirlwind. Hopefully that gives you a grounding on the types of entities across the country that make up this mission-driven financial ecosystem, the kind of work they're doing in underserved communities, and how they're responding when natural disasters hit. And I'm happy to take questions and included my contact information too if anybody would like to reach out to discuss anything further.
Thank you very much, Tamara. Appreciate that thorough and report. And everyone, again, will get a copy of the report emailed to them by staff. Looking to CHD member questions or comments, the Honorable Tanya Doby.
Ms. Tamara, thank you for your presentation. I appreciate your time and effort. I've got two questions. The first is, and I always ask this whenever I hear the phrase underserved communities, simply because of the small Orange County city that I live in that is almost 50% a senior citizens population. But because of my location and demographic, my geography, we don't qualify for a lot of these programs. So I almost feel like a missing middle. So can you tell me what is that designation based on? That's my first question.
Okay, so that's a great question. The CDFI designation specifically, there are two different ways that institutions qualify for for the designation. One is around the income, whether the individual borrower or the specific geography at the census tract level is low or moderate income. And the other way is by the racial and ethnic group of the borrowers or the community, the overall demographics of the community. That said, there are many CDFIs who cannot get certified for the specific demographic you're talking about, where folks are seniors, perhaps seniors who are also disabled is often, one that we see our folks focusing on, so that they're not technically certified for that particular market. But as we saw in the example with that SELF CDFI, they specifically do focus on serving the needs of elderly. So there are institutions out there that have this as a focus of their work, but unfortunately you can't look up at the national level who is certified to address the needs of senior citizens.
Okay, thank you. My next question is, you had mentioned the Sage Park Land Trust Community. It had a long name, but I remember Park because Sage is my daughter's name. And then I went ahead and, because Google's my friend, I looked it up, and that particular project is in the city of Irvine. So my question is, how would that have worked if the land hadn't have been donated? Because I know that Irvine donated that land. So how would a project like that work in another city?
Yeah, so very good question. I guess the first thing I would say is that there are many, many times that through a land trust, land is donated, and that's part of how the deal is made feasible for a larger affordable housing development. Other times, we see corporations or foundations that will subsidize the sale of land for larger affordable housing developments. The other kind of work that CDFIs are doing around affordable housing, it's what's referred to as NOAA, naturally occurring affordable housing, where rather than setting out to build a whole new development that is has an X percent of units that will be restricted to a specific income level to meet all the federal and usually state requirements around affordable housing development. They're working with small business developers themselves who are focused on rehabbing existing housing that is just affordable because of the nature of how much it costs relative to the income level of the population in the area, and trying to make more of those units, rehabbed and accessible while still keeping them affordable. And that is a piece of work and a strategy that CDFIs use to address the affordable housing issue beyond kind of full-scale developments.
Thank you. The Honorable Frank Serenian.
Thank you, Ms. Thetford, for your presentation. It's an important topic, but the devil is always in the detail. One of the Sustainable Development Goals of the UN is the eradication of poverty. And the eradication of poverty works with specifically the topic of building wealth. And the main topic of building wealth in communities that are more affluent is homeownership. Most communities that are more affluent than others, homeownership is probably the main characteristics of the wealth of that particular family. Given what you've said, given the presentation that you've made, homeownership still in these underserved communities in various demographic groups remains substantially low than other communities that are more affluent. Why then, or what are the disruptors to what you're presenting in these communities that we do not have more homeownerships in these communities?
Okay, if I understand the question correctly, you're looking for clarification around why homeownership levels are lower in low income and low wealth communities compared to more affluent communities. Is that accurate?
Right.
Great.
Basically, and given what you presented, it sounds like the homeownership should be higher because you're providing a vehicle for 3% down payment, 0% interest. But again, the devil being in the detail, I don't know how the qualifications of these people work and what communities you're in and what efforts you're making in order for this homeownership to happen.
Mm-hmm. Okay, understand. Let me think about the best way to respond. So I think the first thing I would say is when I mentioned at the beginning that CDFIs, there's quite a variety of them across the country, and many of them are quite small. So one factor that I will definitely put out there is the scale of the work that's happening. Depending on the community and the size of the community that you represent, you may have a very impactful CDFI close to your area, but that is not operating at a scale that is going to transform a low-income community by themselves. So that's one factor I'm just going to put out there. The second, though, that I did want to make sure to cover is that we have seen some improvements over the past. In particular, I just saw stats that were released recently of the last 4 years in homeownership rates improving, especially for communities of color, which traditionally have had much lower rates of homeownership. And some of the factors that I've seen pointed to are the types of products that these institutions are able to make available. That, to answer your question at the very beginning, what is the barrier? What's preventing lower income, lower wealth individuals from purchasing homes? Some of the main factors do tend to be lower credit scores, where a traditional bank will immediately disqualify them from a mortgage. CDFIs often are providing either, they literally are starting with a credit building program and products to help somebody establish and improve their credit so that they can qualify for a mortgage. They may also be able to be making mortgages to individuals that have lower credit scores than a bank would traditionally consider. And then they also have the category of products like requiring a lower down payment, being able to draw in grant funds from foundations and other philanthropic sources for down payment assistance, so that you don't have to come with that full, large down payment in order to purchase the home. You have assistance when you may not be able to provide that assistance from your own family or network.
All right, thank you. And the last question from our members, I don't see anyone online, and I want to keep to our promise of getting us out of here timely, is, yes, I was about to introduce you. Honorable Shauna Elias.
Thank you so much. Thank you for your presentation. This is fascinating to me. I have actually never heard of the CDFIs before, so this was very informative. I'd be curious to know, and I know this is a really general question, but what do these organizations, how do they connect with the end user? I'm also in real estate, and so it's surprising to me that I've never heard of this. And I'm working with people buying and selling homes all the time. What are some efforts that these organizations are taking to connect with the end user, and does that involve local governments? If you could just give some information on that, I'd appreciate it.
Yeah, for sure. And just to clarify, in this example, when you're saying end user, would that be the either the homeowner or let's say the renter? Is that who you're thinking of?
Yeah, let's for close to my community, let's say a family in Altadena who lost their home. The house has been in the family for generations, and they might be low income, but they have this house, so they would be a great I guess customer for one of these, the CDFI.
Yeah, okay, great. Thank you. We see, I'd say, a couple different strategies. One, to this point about scale, many CDFIs are going to be on the smaller side. They are most frequently using word of mouth referrals through these communities. I would say that winds up still being a primary strategy, which obviously leaves a lot to be desired when it comes to brand awareness and marketing. The second strategy, which especially larger or more medium-sized organizations, and that we've seen as the field has evolved, they are partnering, as I mentioned, with other nonprofits. So as somebody goes to a United Way or goes to a Habitat for Humanity, they are often being referred to a CDFI for the types of services that they can most appropriately provide, that the nonprofit wouldn't. And then the third example, yes, is definitely this collaboration that I think especially after the COVID pandemic, we saw tremendous explosion in terms of collaboration between local and state governments and CDFIs. Just so many more times where the government itself became a mechanism for educating about CDFIs to the end user, as well as providing direct referrals for particular programs or services.
Thank you.
Thank you very much. Are there any members of the public who wish to ask any questions on this particular item? Seeing none in person. I'm sorry.
Oh, Mr. Chair, I don't see any members of the public wishing to participate in person or online.
Okay, thank you very much. Thank you to both Mr. Wick and Ms. Thetford for your informative and excellent reports and the great questions from the committee as well. I want to recognize, as part of my report tonight, new CEHD committee members. We're very lucky to have them and appreciate their hard work in advance. The Honorable Thomas Olva from El Centro ICTC, the Honorable Joe Baca from Rialto SBCTA, and if I mispronounce, you're welcome to correct me. The Honorable Gary Gardner from Regional Council District 2, Desert Hot Springs. The Honorable Victoria Garcia, Regional Council District 67, San Fernando. The Honorable Shauna Elias from Regional Council District 33, Glendora. The Honorable Judy Woolsey from Yucaipa SBCTA. And the Honorable Peggy Wang. I'm teasing. I was just teasing. I'm sorry. From Yorba Linda, OCOG. And for those who don't know, Peggy used to be the chair of this committee and served exceptionally well on behalf of all of us in the Regional Council. So welcome to all of you and look forward to your great work on this committee. To the members of this committee, I thank you for bringing your questions, ideas, and lived experiences to our Joint Policy Committee on Regional Recovery and Resilience last month. In the aftermath of these devastating wildfires, so much of our attention is rightly dedicated to the immediate steps of recovery, including debris removal, temporary housing for victims, and rebuilding. However, I commend all of you and this agency for continuing our focus on long-term planning, which will help ensure that our communities are rebuilt to be safer and better protected in the future. I look forward to working with all of you on tackling hard questions and developing actionable and implementable plans and best practices that will create a more resilient region for the future. And on that note, I do want to thank our staff. They do so much great work. I want to thank Richard Lamb. I know he has a lot to add. No, anything today? Our attorney.
Nothing further, Your Honor.
Thank you. You get paid by the minute. And of course, Cecilia Polito, thank you very much. And Elizabeth Carbajal. And I will turn it over to and thank Jonathan Davis for his report.
Oh, thank you, Mr. Chair. And I apologize, committee members. I have a few updates to share with you today. The first of which is a reminder that SCAG is hosting its 60th annual regional conference and general assembly on May 1st through May 2nd, 2025 in Palm Desert. Come celebrate SCAG's diamond anniversary by joining us for this unique opportunity to gather with local and regional leaders and collaborate on solutions for mobility, housing, the environment, and our economy. If you are interested in learning more, please visit SCAG's 2025 Regional Conference and General Assembly website. The next update I have is regarding SCAG's annual scholarship program. The application for this annual program is now open, and we are accepting applications through Friday, March 21st. The program, in partnership with the California Transportation Foundation, provides 9 students with scholarships of $4,000 for high school or community college students within the SCAG region. For more information, please visit scag.ca.gov//scholarship for more information on our requirements and our application. And my last update is to share with you all that during our April CEHD meeting, we will hold elections for the 2025-2026 chair and vice chair positions of this committee. If you are interested in nominating someone or yourself, please reply to Maggie Aguilar, our clerk of the board here at SCAG, and submit the name of the individuals no later than 5 p.m. on Wednesday, March 26, 2025. Nominees must be regional council members to be considered for the chair and vice chair positions of this committee. And the term of office for the newly elected chair and vice chair will commence upon the adjournment of our General Assembly business meeting on May 1st, 2025. And staff is available if you have any questions on these positions. Thank you, Mr. Chair.
Thank you very much. And that the scholarship awards, if you don't know, for your communities is fantastic. So share that information. I highly encourage that. Are there any member announcements? Anybody? Anyone online? Nope, seen them. Okay, then I will adjourn. Our next meeting scheduled for Thursday, April 3rd. Thank you all for your participation and activity. We'll see you next month. The meeting's now adjourned.